Welcome traders to another video. And in this video, I'm going to discuss where to find the best supply and demand zones. Now, as you know, and I've spoken about plenty of times, that you will always find the best supply and demand zones at the extremes. However, for me, who chooses my event one on the daily, others may choose their event one on the H1 or the 15-minute or the H4, which means my version of an extreme is going to be very different to your version of an extreme if you're using a different time frame. Okay, so it's all relative to the event one that you use to execute, to use to find that initial supply and demand zone, and then from there you use the event chain to then confirm if that zone will actually work for you and be profitable. So currently we're just looking at the Euro USD, and we're back here around between 2016 and 2017, right? And we can see right now, so let's just get some lines drawn up here. So this would be the very low, right? This would be the lowest part, the extreme. And this right here would be the high, right? Just in this little area here. Okay, so let's just go from the high to the low, right? So now we know we've just hit this high up here. All right, so on the way down we could potentially look for a supply zone. So as we can see, we have a clear one right here. It's kind of like a hidden supply area. And we can see that also this could potentially work because we have a large area for profit potential, right? We've got no friction on the way back down, right? No friction at all. And then when the market reaches back down here, we also have a zone. It's just on top of a zone. And I love zones on top of the zones because they're always so powerful, right? So this would have been a perfect trade, right? Now, if we're looking to the left right now, you know, we could, if we wanted to, we could pay attention to this right here, right? It's just but eventually at some point the market's going to fall through that, right? But in the initial phase, once the market came back up into this zone again, it dropped and then bounced back out of here, right? But as we can see at the extreme, right? And let's see what the so when this market fell out of here, how many days did it take to actually come back in? 16 days, right? It took 16 days for the market to come back in, and then it took, hold on, it's just, it then took 3 days to hit the profit target, right? Because we're trading from zone to zone, okay? So that would have been an amazing trade once that came into that zone. So let's just keep on moving now and see what happens. All right, so we're still up in this high, this extreme area, right near the top area here. So also let's just take a look at this. So now we have another zone here. Let's look at that time frame as well. Let's just get rid of this. Let's look at that time frame from the market fell out of there to the moment it entered. $37 days. Okay, fair enough. It's like, I mean, 30 to 35 days is really the sweet spot, but a couple days over, you know, fair enough. What are you going to do, right? But 37 days it took to come back into that zone. And then since it went back into this zone here, it's dropped massively, right? And we also got other ways that we've got other areas that we could place positions as well. We've got here. And the market even came back up to here. So at the extreme, we had 1, 2, 3 opportunities to take this short on the Euro USD in between 2016 and 2017 to the downside. All right. And we can obviously see that these zones are the banks placing sell trades. And the reason why they're placing sell trades, we can see that they're all at the same area, right? Come down here, they're all at the same point. Boom, last sell trades and the market begins to fall. It's because the market continues moving down. If these zones were there and then the market continued moving up, we'd know that they're profit taking areas, right? But we know right now that these are areas where the banks are actually placing trades. And by the way, guys, if you haven't picked up those supply and demand books yet from Price Action Ninja's website, then please click the link below. It's the first link in the description. Do yourself a favor, get yourself educated into supply and demand. There's like 7 books there. Take a look at them. They are absolutely amazing. And I guarantee that you will not regret getting those books. Anyway, let's continue. So now we are moving towards the low of the market. So now we're at an extreme low, right? In this little area here. Now we're in an extreme low. We know it's broken this low. So now we're looking for moves to the upside, right? So let's just take a look at what's happening here. Let's just extend this just a little bit more. All right, perfect. So at the moment, there's nothing. Well, we've got a nice engulfing here, bullish engulfing, but the market broke. We've got a 1 here. The market broke below there. So right now, you know, not much. Market's moving down, and now we have a lovely bullish engulfing here as well. And we've got a nice little tap on that too. Market's pushed out, come in, broken out nicely. And then the market continues to push up massively at this point, because right now we don't need to focus on what's to the left, because everything that is at the left right now is way outside of our time frame, our 30 to 35-day time frame, to start looking for areas of supply zones to then take profit. So at the moment, I mean, and if we take a look at this run as well, right? This whole run, there is literally 2 areas that could present, maybe, that we could possibly think that, you know, the market could potentially turn there. We've got 1 there, and we've got another one. Hold on. Here. Oh, and there's 1 more actually that I just spotted. And just another one here, which gets broken as well. Apart from that, there are no bearish engulfing candles to even give us some sort of indication that the market has potential to turn at this point, or we would even consider, until we start getting to the highs, right? So let's just get another trend line out. Let's just get that there. Let's move this across. Let's move this across even further. All right, so now we start getting to the highs, new highs. There's a previous high. We start getting into new highs now. And as we approach these new highs, we start seeing bearish engulfing candles that could potentially present opportunities, right? Now, I say potentially present opportunities because we would use the event chain to confirm our assumption of these opportunities that we're seeing, right? So this one most likely would probably not have been confirmed, so we'll continue. And let's just copy this. And voila, we have one that has been confirmed, and it begins to move down. Now, we can see that this market continued moving up after down. So what do you think happened here? This is really not the banks placing trade. This is potentially just profit taking, right? And then the market decides to move back up again. Okay, so this area here is just potentially profit taking, because if we look to this zone here and we try to make an assumption and say that this was the cause for that move up, let's look at the date range. Let's look at that's way out the time frame, 78 days, right? That's not this market moving up. This area here is not the cause of that. It's not the cause of that. Okay, it's maybe coincidental, but it's definitely not the cause. Okay, so let's continue moving up here. And again, as the market's moving up, what do we see? We've got just another area here. Market moves straight through it. Potentially another area here. Again, market moves straight through it because clearly the banks and institutions are on a big buy here. So now we've broken this previous high, right? And now we're at a new high. Now, really, it's when you start looking at it like this, it's quite easy to determine after, well, I know we can say this in hindsight, but consolidation kind of gives the game away, right? Because we know that once the market is at a particular high or particular low, what do the banks have to do at that point? They have to manipulate the market to get orders filled, okay? So all that's happening here right now is now that, sorry, let's just do this, sorry, before we get into that quickly. Getting ahead of myself, let me just clone this. We've now got a new high, right? And now the manipulation starts to take place by the banks and institutions, right? Now they want to reverse the market, okay? Now in order to do that, they need to get their orders filled. So they're going to get their biggest orders, the first orders, the biggest orders placed first, right? And we can see that clearly happening. Let's just get these tools out. First order right here, big one. Let's copy that. And then the second big order right here. Okay. Now, I've got a lot of new subscribers recently. So what's happening here is, just to make you aware of this, is that the banks need to manipulate the market in order to get their orders filled right here. And they do this at extreme highs and extreme lows. And even in the middle of moves when they want to add positions to their trade, just like we do. All right. But they don't operate the same way we do because they trade in much larger sizes. So they need to know that there's a lot of people going to lose before they decide to place a sell trade. Right. So now all of these, hipsters, retail traders buying up the market thinking, yep, the market's going to continue pushing to the upside. Now they begin to manipulate, right? So they place their first order. Boom, the market drops. Okay. Now what happens here? Traders think that the market's going to start dropping down, so they start placing trades. Boom. The market then reverses. The banks and institutions then take profits off their trades, which then consumes all of these sell orders. They place more orders, right? Then they place another sell trade. And again, another order. Another order. and this could potentially be their final order. All right. So they're placing trades, taking profits off, placing trades, taking profits off, placing trades, taking profits off. And all the while this market is pushing up, there's the retail traders who are pushing this market up, and then the big banks and institutions are then consuming all of those orders. Markets pushing up, then consuming all of those orders, markets pushing up, retail traders, and then once all of those orders are consumed, the market begins to push down, and then the retail traders who are all in this uptrend, it becomes too painful. They then start closing all their trades, and when you close your trade, you then have to press sell, which then gives more fuel to the push to the downside. All right. But now there's also opportunities for us as the retail trader to get in on this down move if we're aware of what's actually happening when this is taking place, right? Again, at the extreme, right? This is all happening at the extremes. This down here at the extreme, this up here, even though it's probably profit taking at the extreme of this high, then it begins to move up again, broke this high. Now it's at a new extreme, okay? So where's our opportunity now? It's quite clear. Got this beautiful bearish engulfing right here. Market just taps it there, but comes into it nicely. So I reckon with one of these trades, right, we'll be able to find an area to get our sell trade placed and take the market to the downside, right? So it's just so important that depending on the time frame that you're trading on, you're always looking for these extremes, right? So look here again, the market's then pushed down, and we can see that the banks are placing more sell trades, right? So they've got, let's just move this up just to make it a bit clearer. So they got one here. They've got a bunch here. And they've got a bunch over here. And remember, they all got to get their trades placed at the same area, right? And when you look at it like this, it begins to make sense and open your eyes and bring about awareness. And it allows you to look at the market from a different perspective. And as you can see, they place more trades and the market has just been pushing down ever since, right? And they're placing more trades as the market's going down, right? These are all the banks placing trades. These are all areas where the banks are placing trades because the market is pushing down, right? So always look for those extremes. And remember, those extremes are always going to be relative to the time frame that you're trading on, okay? And then once you find that particular supply zone at that extreme, you then use the event chain for that confirmation to then take that trade to that next supply or demand zone to take your area of profit. So that is that for today, guys. I hope this has maybe opened your eyes to a few things, just cleared up a few things. I mean, yes, sometimes you do see me placing trades on rally base rally, but that's because I'm looking to add positions or I'm looking for a continuation, and that move, that rally base rally, the market then comes back down to it. That's in the middle of a move on the way to either a supply or, well, it would be on the way to a rally base rally. It would be on the way to a supply zone, right? But that's because I'm looking for continuation. I'm looking to add positions. So I look for those things to add positions. But would my initial position be at a rally-based rally? Hell no, right? It would always be at a, let's take a look up here. My initial position would always be, let me get this. Is there a squiggly here? Yeah, it would always be at a rally. Okay, that just didn't work. Oh, rally, perfect. Base and a drop. right? It would always be rally, base, and drop. My initial position would never be at a rally, base, and a rally. Never. Okay, I would never look for the market to come down here and then take that position and move further to the upside. After that, after the drop, base, and the rally has occurred, right, and the markets then come back in and then decide to push out, and then there's a rally, base, and a rally, and then the potential to then move back down to this basing and then move back up, I could potentially look for area here because it's already proven itself to me that we're moving further to the upside, and I want to try and get that supply zone that we're moving into to the upside. All right. And I would only take this again if the market confirms for me using the event chain. All right. So I hope you've enjoyed this video, guys. I hope it's been informative. Let me know any areas that you're struggling with, and I will do a video on that when I get the time. But please leave your comments down below. And again, if you haven't picked up the supply and demand books, make sure you do. They literally changed the game for me when I understood all of this stuff, when I understood the why. As I said, those books give you the why, and the event chain gives you the how to execute once you understand the foundations of how the market actually works. I'll see you next time.